I think one thing out there that confuses a lot of people when they are possibly searching for interest rates, they might not understand the difference between a conforming loan, a jumbo loan, and then what's called a conforming jumbo loan.
Right.
You know, if you have a loan that's $417,000 and below, that's going to be a conforming loan, so you can get what's called conforming interest rates. If you have a loan between $417,000 and $506,000, that's a conforming jumbo. So those rates are a little bit different. They're a tad higher. And then anything above $506,000 is considered jumbo. So you know, when people are out there searching, that's why real estate agents refer people to trusted mortgage professionals in the area that they live, where the people will be buying homes. You know, I have a lot of questions from people who, you know, say they're searching on the internet and they found this fantastic rate. Well, that's a generic rate. They want you to call them. You most likely aren't going to end up with the rate they promised you online because they don't know anything specific about you or the loan that you're interested in, if that makes sense.
Yeah, it does make sense. I've heard that the money is getting a lot looser for those people who want to have jumbo loans. Is that the case?
Well, I don't know about looser. I mean, you know,
just more money available.
There's more money available. There are still guidelines. You know, they still have to be approved. They still have to qualify. As you start to get into the jumbo loan limits, they have to put more money down. But there are some availability of a first and a second up to certain LTVs, again, the loan to value, you know, maybe 75% or 80% or even 85%. So they might do a first at 70% and a second at 15% to have a total loan to value of 85%. Depending on, you know, if it's a $750,000 loan, $1 million loan, $1.25 million. So again, there's specific guidelines that we have to look at with different lenders. You know, they might want an ARM, they might want a 30-year fixed.
It's just variable depending on their situation.
And again, they have to have reserves. Some lenders are requiring 12 months of PITI, which is principal, interest, taxes, and insurance, as reserves. And they have to be liquidable reserves. So not retirement reserves, but some type of a money market or something that can be liquidated.
So it sounds like it's definitely more difficult to get a loan these days than it has been in the past.
Definitely than it has been in the past, but I think the government and lenders are doing things to make it a little easier than it has been in maybe 2009, 2010.
Oh, that's good.
Yeah, definitely. I think it's a great time to buy. Again, with interest rates at, let's say, 4.25% today, and housing prices down, I'm seeing first-time home buyers. I'm getting a lot of referrals for first-time home buyers.
And I've seen in the market also, you know, a house that you could buy in a lot of cases in King County would actually rent for more than what the mortgage amount would be. Yeah,
I've heard that there are renters out there paying more for rent for a condo or a townhouse or a house that they could go buy.
Oh yeah, I've seen it.
Even if they could get 3.5% gifted, you know, from a family member and do an FHA loan. FHA loan allows gift funds, 100% gift funds, where conventionally the borrower has to have 5% of their own funds, and anything on top of those 5% can be gifted, unless the family member wants to give all 20%. If they want to give all 20%, then all 20 can be gifted. But FHA is a great way to go right now as well, with 3.5% down.
Well, thanks so much for your time, Craig.
Thank you.
And for those of you looking for a home, good luck, and thanks for watching this video.